As we approach a brand new trading year, traders like to go back, look at what worked in the year coming to an end, and probably even more important, what didn't work. In this video, we'll run down our top 3 trading strategies of 2022. From multi-decade high inflation and interest rates to the war in Ukraine, 2022 was a year of headline-driven extreme market volatility that provided endless opportunity. The number 3 trade of 2022, the energy trade. No one saw it coming, but 73% oil rallied, going straight up from the first trading day of the year in January to it reached a high March 7th of 130.50. Unbelievable. Even crazier than that, we've seen prices retrace the entire move. As of this recording, as a matter of fact, they've gone negative on the year. This was a pure volatility trade. We saw the ATR, which is the average truly range of oil futures, rally along with prices, easily taking out prior range highs set during the pandemic when, if you remember, oil went negative. The ATR range then topped out at more than $10 a barrel per day. That's wild for oil, but it also provided equity traders with equally profitable opportunities in related equity trades. So here's a quick chart that we have of some of the top performing oil stocks of 2022. Now, as a day trader, during the initial rally, we were treated with almost daily opportunities. Whether you were a scalper, placing many trades throughout the session, or positional type of trader looking to capture bigger moves, the key was to just watch oil futures. Now, understanding that individual price action on equities was being dictated by bigger moves happening in the oil futures was key to making money in energy stocks as a day trader in 2022. So your trade number 2 for 2022 was the CPI. Now, let's face it, many traders experienced not only a bear market in 2022 for the first time, but also learned to understand that economic releases, like the monthly consumer price index update, which for the prior decade up until 2021 was a non-event each month, can and in fact did take center stage quickly as we saw inflation soar throughout the year. As traders, we have to be able to adapt. The market is always changing. Traders who embraced this new environment early made the most of these opportunities. In this new environment, the market became extremely headline-driven and sensitive. Bad news was good for a period. Now we've found that good news has become bad. So what is CPI? Well, in short, it's how we measure inflation based on an average price of a basket of goods and services representative of aggregate U.S. consumer spending. As a trader, we need to understand that in a high inflationary environment, the market does not like high CPI prints. This year, we saw month after month of multi-decade high CPI prints. Basically, growth stocks have rallied on borrowed money to fuel, in some cases, triple-digit % multiples and monstrous growth potential for years. When the cost of borrowed money increases, the value of these businesses just falls. So where is the trade? Great question. CPI is a monthly release typically within the first 2 weeks of a new month, and the number is released in the pre-market at 8:30 Eastern Market Time. This creates more volatility as both volume and liquidity are low in the pre-market, creating expanded ranges and plenty of tradable moves. The most popular instruments to trade are ETFs. Market-following ETFs like the SPY, QQQ, or the TQQ and the DIA are all viable options. The basic principle behind the trade is actually quite simple. Look for momentum-based move off the number, take your trade with the momentum with the plan of either scaling out as volume velocity dies or having a set all-out stop target to capture profits. Trading strategy number 1 for 2022 is simply the Fed. You have to go back to the last elongated period of high inflation in the US in 2008 to find the last time for a prolonged period that this trade was a can't miss. For more than a decade, the market has enjoyed little to no inflationary worries and little to no impact from Fed meetings and interest rate decisions, simply because rates were near zero. That all changed this year. Not only have we seen one of the most aggressive pace of rate hikes from the Fed ever, the market also had to digest the lack of trillions in bond buying that was also shut off as of September. As day traders, we've once again become accustomed to checking the Fed calendar at the beginning of every single month and marking down the next 2 p.m. Eastern announcement that's to come. Now, from a market perspective, there's a few things to understand that happen during these announcements. In the minutes and seconds leading up to 2 p.m. release, liquidity vanishes. Algos are shut off, traders are ready to fire, but typically there's not much to fire at. Second, we go from little to no liquidity and volume to possibly the highest volume and available liquidity you will see all month. This creates an opportunity. As traders, we search endlessly for volume and volatility daily. Some days are going to be better than others. Fed Day can provide the highest level of both. Now, third, unless you've written a program to take the trade for you, don't worry about missing the initial move. In most cases, the move won't actually happen until Fed Chair Powell has taken the microphone at the press conference that always follows at 2:30 p.m. So as we head into a brand new trading year, we look back to salute the top 3 trades from 2022. Happy New Year to all of you from us here at Trader TV Live, and here's hoping for more volatility and energy in the upcoming year. As always, test all strategies before taking them live and catch us daily on TraderTV.Live.